Northern Hemisphere equity markets have opened over the past 24 hours and have started the week under some pressure. US and European equity markets have both seen some marginal falls overnight. The main pressure has come from investor sentiment centred around a 60 minutes interview in the US on US Fed Chairman Ben Bernanke. Bernanke suggested that he believes the US economy is getting close to not being self-sustaining. He believes they really do need to see 2.5% economic growth before they can see jobs start to settle down or even some good jobs growth coming out of the US economy. They are only really at this point just now. Despite the heavy investment by the US Fed over the past few months, they have only seen marginal jobs growth, and over the past month they've actually seen unemployment rise to 9.8%. This has meant that the US Fed is prepared to put more money into the tank if they need down the track. This has been of some concern to equity markets. With some weakness in global equity markets, there has also been some pressure on currencies from this part of the world. The Australian dollar has fallen against the US, and the Kiwi dollar has also weakened against most counterparties. We are trading on Tuesday morning at 76 cents against the US and 48.40 against the Great British Pound. There's also been some speculation that we aren't expecting to see any moves from our reserve banks in both Australia and New Zealand this week. The Reserve Bank of Australia will announce their overnight cash rate on Tuesday afternoon. We aren't expecting to see any change from 4.75%. Here in New Zealand, the Reserve Bank of New Zealand will make their official cash rate announcement on Thursday. We aren't expecting to see any change from 3%, and in both cases, the signal is likely to be that they won't be changing interest rates anytime soon. New Zealand lamb schedule prices have eased slightly over the past week. However, this is likely to be due to local factors as opposed to any changes in demand for our international markets. Dry conditions in some parts of New Zealand are really having an effect on farmers being able to finish their stock. This has also eased some of the pressure on procurement for the meat companies. For this reason, schedule prices have eased slightly. However, the outlook for the international market does remain very good. Supply is very tight, and we still see good prospects for increases in international prices. Over the past week, international prices have in fact increased. For this reason, we remain positive about the outlook for New Zealand schedule prices for the coming season. We continue to expect to see average schedule prices increase by about 15% on last year levels.